and invest in, when I say yourself, yes, your knowledge base, but investing in yourself and your own company, right? We're constantly, I mean, we didn't bring up Hireclout because we've been talking about kind of investments outside of my company, but this is the number one thing I believe in, right? It's the number one thing I invest in is my company. And that means cash infusion. That means not taking income from the company sometimes, because that's a form of investment.
As a tech leader, it's difficult to know when to move money outside of the business in order to grow or preserve wealth. In this episode of the Tech Leaders Playbook, we're going to take a look at where Avetis Antaplyan invested as Hireclout has scaled over the years. Let's dive in.
Good morning, everyone. Welcome to another episode of the Tech Leaders Playbook. Today, I'll be with my co-host, Nickolas Natali, who's going to be asking me some questions about investments, I understand.
That is correct. And we're not going to waste any time. We're going to dive right in. Avetis, the people want to know. So as Hireclout has scaled over the years, how has your investment strategy changed? And maybe where does it start? Let's go there. When did you start looking at other avenues?
Nickolas, the first thing I want to talk about is before we talk about anything, we talk about investing in ourselves. That's, I think, a gem that I don't think people tap into. I think, what you see is people want to get better, but they continue to do the things they do every single day. You've heard this phrase, I'm sure. Someone has 10 years of experience. Well, sometimes they don't have 10 years of experience. They have 1 year of experience times 10. And that's actually a very common thing that I see with people, is they really don't grow. And I mean, there could be some accumulation of knowledge along the way as they learn from their mistakes, but hardly do you see people investing in themselves to get better faster, right? So my motto is 1% better every single day. And the way I invest in myself before I can invest in my company or invest in real estate or whatever it is in myself. So, I do a lot of reading. So I read a book a week. First of all, I read a book while I drive to the office and back. And I also read a physical book at home if I can find the time. So it's extremely important. The amount of knowledge that I get just from those books is insane. And I don't randomly pick books. These are typically books recommended by other successful people. So that's one very important thing. I'm part of CEO think tanks. So these are groups of people, really smart people, a lot of times smarter than myself. So what we do is we share knowledge, we share network, we share books, we share ideas, we run ideas. I've been part of Vistage, YPO, and now I have my own group that we created recently. So that's another one. Going to seminars, going to speaking engagements, and just constantly listening and learning. That's the number one thing I would recommend investing in, is yourself, right? No one can take that away from you, that knowledge away from you, as long as you constantly are accumulating knowledge and getting smarter and smarter and smarter. And just ask a lot of questions to every great person that you meet. So that's number one. Before we get into any asset, I think the number one asset class is yourself, you. So investing in yourself is extremely important.
That's great. Let's stay on investing in ourselves a little longer then. Is there a point where it can be not fruitful? And I'll give an example. There's been a handful of entrepreneurs that I've interacted with, and this seems almost not across the board, but in a lot of cases, all entrepreneurs almost have a graveyard of failed businesses, and that's to be expected. But there's also another half that I've experienced where they do invest in themselves, but to the point of the debt is wild. They will take on X amount of debt, could be 6 figures of debt, just to invest in themselves, to have the know-how. What's your opinion on the degree in which you invest in yourself, and maybe compare that to the action you take too?
And are you talking about investing in yourself, your brain, or are you talking about in your company or your journeys, your entrepreneurial journeys?
Talking about ourselves as our brain, similar to the things you mentioned, like resources like books, or going to seminars, or going to conferences, things where you can easily find yourself spending thousands of dollars on over the course of a few weeks,
Well, I mean, books are very inexpensive, right? And there's apps. There's an app called Libby that's absolutely free that you're tapping into, the library. So books are extremely inexpensive and probably the smartest thing you can do. And I say, focus on things you can afford and things that are not that far above your means, right? I don't really know how to answer that question. I don't think you could ever spend enough on your education. Now, what I don't believe in, and I've seen this before, is the overeducated. These are people that are got their bachelor's degree, didn't really work, and then they got their master's degree, and then they didn't really apply it, and then they went and get another master's degree, and they don't really use that. Now they're looking for to get a PhD. Oh no, now they're going to do real estate. That to me is wasted effort, right? Those are a lot of false starts. That I would say would be a waste because you're talking about, I don't know what master's degrees cost these days, but $50 to $100,000 minimum if you're picking something basic. And to do what? To not launch, not to use that is not smart. That's where I don't actually recommend people going into is too much effort on master's programs and PhDs and things like that, unless you need it, right? For me, it's simple things. Just surround yourself by really, really, really highly intelligent people that are highly engaged in life and in business, and learn from them. Learn from books. Go to seminars. They're not that expensive, So I don't. I would just stay away from highly expensive PhD or master's programs because it won't get you necessarily what you need.
Yeah, those are good takes. With that being said, let's move into the asset side of things. What was your first outside of yourself investment? Was it real estate or some other means? And I think the way I'm viewing this, you can tell me if this is wrong too. I'm viewing it as you got traction with your business, then you had extra on top to allocate elsewhere outside of the business. That's how I'm looking at it. But
Correct.
you tell me.
Correct.
Tell me too. Yeah, where'd you go?
So for many years, while the Mitchell Group and Hireclout were growing, we didn't have 401ks. So I had to invest for my own retirement. And how do you do that? Real estate is an obvious choice. But how I got into real estate was actually really interesting. So, many, many years ago, we bought a house, and we had a young kid. We bought this house and we were excited. I thought that the house was turnkey.
Yeah.
My wife decided that it wasn't turnkey, and she thought, "Hey, can we redo this and redo this?" Or next thing you know, I tore this thing down from the inside, and I'm basically rebuilding it from scratch. So I spent a lot of money on this house, and as we were coming out of this debt, one day I was walking by, and it was the 2009 real estate meltdown, 10, 11. And I was walking and I saw all these homes that are like, $400,000-$500,000. And I told my wife, if I could, I'd buy every single one of these homes. She goes, "Are you crazy?" I said, "You think these homes are worth 400,000-500,000? These are homes that were 600,000-700,000 just, 2 years ago. What's changed? Why are they worth so much less now?" So absolutely. I said, "Don't worry. I have no money to make any of these moves." But in my head, I said, I'm going to buy out this block one day. But that's not actually how it started. I knew I wanted to do that. But in 2012 or 13, I decided, my second kid was on the way, and I decided I need more space. We had kind of almost like a townhome-like home at first, and it had a very tiny little front backyard, and we just couldn't entertain, and I didn't have a lot of space, so started looking for a home with a bigger lot. And as I purchased that home, I realized that the home that I had purchased was not worth as much as I had bought and put money into, right? Because we fixed it up really, really nice. And so it basically didn't feel right spending that much time and money and effort just to sell it for the same amount or even at a loss. So I decided, forget it. It's too good of an asset. I'm going to keep it. I'm going to rent it out.
Nice.
So that's how it started. And then a year or two later, I realized, oh, wait a minute. So this home is not only paying for itself and it's an appreciating asset, but I'm actually making some money after, to pay off the mortgage, and I'm cash positive. So I should do this again. So I bought another home, and a year later I bought another home, and then a year later I built a home, and so on and so forth. So every 12 to 18 months after that, I purchased a home, renovated a little bit, and rented it out. So I'm not a flipper. I don't flip homes, sell them. I buy them, I improve them, and I rent them out to really good tenants. And I always pick up and coming communities, places that I would live myself. And I try to double down those strategies. I try to buy homes with big lots. I split the lots, and then I built other homes on top of them or next to them.
You've heard the saying where they talk about it's better to have one well that's 6 feet than six wells that are 1 inch. Have you found any of the external real estate, just because we mentioned investing in ourselves, the external real estate investments be a distraction to the main thing, or has it just been like an improvement and it's been another strategy to your entrepreneurial journey?
That's a great question, Nicholas. I actually don't disagree with that statement. I think too often people spread themselves thin. They're the people that'll, they do your website, and they also sell real estate, and they're also recruiters, and they're also those kind of people. I think are wasting time and effort, and they're not being great at anything. For me, my focus was always, 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 always my business. Real estate for me was it was a distraction for a very short period of time. What that means is, as I'm purchasing a home, there's a very small window of time that you are distracted. There's a lot of paperwork, a lot of activity, a lot during escrow. There's a lot of paperwork and things like that. I tried to do it where it's during my lunches and weekends and afternoon, evenings. But yes, you can be distracted during those very, very tight periods of time. Absolutely, I think that's a distraction, but you find ways to energize the business in other ways, right? So if I was distracted during the week, 2-3 days, well, I'm going to put in time and effort to make sure I make up for that, because the business still has to run. That's always number one. And I owe that to my executive team, my partner, and my employees, right? So yes, it can be a distraction. You have to be really, really smart about it, because you could rob Peter to pay Paul in a way, right? Another distraction point is when I was building homes at one point, I try to do everything, meaning I was the general contractor. I was the one finding the plumber, the roofer, the framer, the concrete guy. And I realized, yes, I saved some money, but what I realized is it was a massive amount of energy drain and pressure on me. And so that wasn't worth it. So again, you learn from those mistakes. So the last 2 times, I've used a construction company that I hand selected, and then I was done. They did 95% of the work, 96% of the work. I showed up. I just made sure things were looking good. And again, that was always done on my time. So in this case, this was a diversification for me on a personal level. This had nothing to do with my main business. But my main business will always get 100% of my attention and focus.
And it sounds like at this point, everything else, for the most part, is automated. Outside of signing the paperwork, you probably have a management company as well.
I do. And Nicholas, it's funny you talked about that, because I believe in a concept called who, not how. Again, you have to have the right who's to support you. Years ago, all this stuff would be put on my back. I would put it on myself, right? Everything was going to be done by me. Anyone that offered help, I said no to. It was for either a lack of trust. I didn't want to burden them with something, or worse, it was like a money decision, right? Well, why do I need a management company who's going to charge me $250 per property when I can just do it myself? The problem is it adds up. The pressure adds up, and it's the little things that start irritating you. Yeah, I mean, think about the who, not how, right? The who, I have my wife who takes care of a lot of the paperwork, so I don't have to deal with it. I had a builder the last 2 times who took care of everything, right? I have a management company who does the screening and showings and all that stuff. So yes, over the years, I definitely got smarter and realized, like, I can't do it myself, and I shouldn't do it myself, and it's not healthy to do it myself. So I think that was the biggest lesson that I took away from years and years of doing it the wrong way. I learned to just pass it off to someone else who can do as good of a job as I would, if not better.
That's a great tagline. Who, not how. I think that's really good. I'm going to put that in my pocket.
It's not mine. There's a book on it, actually. I highly recommend it. I think it's by Dan Sullivan, Who, Not How. It's part of the whole kind of EOS ecosystem, Good to Great. All those books came from this one author, and it's brilliant. But this might be one of the better books. It's a very simple book, but it makes sense if you really understand what they're trying to achieve.
We'll have to put that one in the show notes so people can find it, so they can download Libby.
Yeah. So you constantly have to delegate so you can elevate and take, follow your kind of biggest strengths.
Yeah. I have a friend, he says, automate, delegate, or eliminate. So pretty much like find software that can do it for you,
Wow.
delegate to someone that can do it well for you, or eliminate it because it's not important. Like
There
don't
it is.
take on tasks that aren't important. I think that always resonates with me.
Absolutely.
I want to switch gears here slightly. Since we're talking to tech leaders here, and you're in the tech
Yes.
industry, we have to cover cryptocurrency. What's your hot takes on cryptocurrency? Are you invested? Do you like it? Do you think it's a fad? Is it lucrative long term? What are we thinking?
I have both lots of opinions and no opinions on this topic. I just don't know enough to have an opinion that matters. This is one of the few things that I'm a kind of a follower on, to be honest with you, Nickolas. Is it smoke and mirrors? It very well could be, to be honest with you. I think the underlying blockchain, I think, is here to stay. I think most of these cryptocurrencies will go away in the next 5, 6, 7 years. I think the main ones will find their place. I think there'll be lots of ups and downs along the way, like we saw. I mean, the last, a year ago, whatever that was, huge, massive correction. I am invested in cryptocurrency at a very small scale. I have friends that are, 100 times more than me. A lot of times I just kind of follow their strategies, and I ask them for advice. And then as they're talking, I'll just do what they thought was a good idea, like at a lunch or something. If they're like, "Oh, you should buy this," I'm like, "All right, let me just buy it and get it out, get it over with almost."
Yeah.
But I don't have enough knowledge or experience to either go all in on it or go all out. But as always, when things are down, it's probably a good idea to invest in it, especially if you believe in it long term.
It goes back to your point of be surrounded by smart people. So if there are smarter people in the space that you're friends with, you can rely on them for information.
That's it. And I have myself not invested enough time to learn it at the level I should to be a good investor. Do you know what I mean? For me,
Yeah.
I rather invest in stocks, which I know for a fact that they're real. And they're more tangible, and I've done well with it, so I feel a little more confident there.
Are you an individual stock kind of guy or an index fund kind of guy?
More individual, but again, I use other resources to invest on my behalf, and they will choose their own strategies.
I want to hit you with this. This is what I think happens. I think there's a. You can correct me if I'm wrong, Avetis. You've seen it. You've lived through it. There's a timeline in terms of investing. There's a timeline of you're going to grow your wealth, you're going to grow your wealth, you're going to grow your wealth, and then at some point you're going to switch your mindset to preserving your wealth because you've accumulated maybe the amount that you feel you need or you wanted, your whatever metric. So I'm curious for your risk management in your own portfolio as your business has grown and your financial circumstances have changed. Have you seen yourself switch from growing wealth to preserving wealth and maybe changed in that kind of strategy?
Little bit, but I don't think, I'm an aggressive investor. So for me, I don't know if I'm truly I have everything I need now, let's just preserve mode. And I'm not necessarily sure I have the personality to be that. You know what I mean?
Yeah.
Yes, there are times where I will take a portion of my assets and I will now make it more safe, right? So before I would step on it consistently. And this time around, there is a portion of my assets that are in very basic CDs. CDs are paying 5.3% now.
Wow.
So that's a pretty damn good investment to fight inflation and to kind of almost sit on it, right? So right now, I'm not sure if real estate's the right place to invest in, at least residential. And so for me, I don't have quite a plan. So what am I doing? I'm kind of sitting on it, right? I'm sitting on 3 to 6 month CDs just so that I can have a better picture of what's going to happen in 3 to 4 months as I watch the market, right? And so, yes, I guess in a way that kind of it's more of a strategy of diversification again, right? The part of my assets are in a very risky kind of stock, high-flying stocks that in the next 5 to 10 years could double, triple, quadruple my money, and this is money that's long term. I don't even think about it. It's money I can live without. Other money is there. It needs to be liquid for real estate investments or whatever. Other money is whatever it is. I think it's more about diversification than preservation. You know what I mean? But I think again, it's smart. I don't like being greedy. It's not all about more and more and more and more and more money. You just got to make your money work. And that's kind of where my focus is all the time, is where should I be investing in? And back to the who, not how, again, constantly asking people, what are you doing? What are you investing in? Sometimes I get involved. There's a gentleman that wants to build, apartment buildings, right? They buy, they build, and I might get involved in a process like that. I might continue to do my own thing. I might do some stocks. I might do CDs. So it's more about diversification for me at this point, at least.
Hey there, we hope you're enjoying the Tech Leaders Playbook podcast so far. If you are, we'd love it if you could take a moment to leave a 5-star review and subscribe to the show. Your support helps us reach more entrepreneurs who are looking to make a positive impact in their business and life. Thank you, and back to the show. And speaking on investing in kind of people, let's move to angel investing. How did you get started in angel investing? Because to me, I'm curious too if it's like there was a startup that approached you, or you got involved in a startup investment group. How did angel investing come about for you?
Well, I'm in tech, right? So I constantly am approached when I go on speaking engagements and things that for years I've been in kind of I've been approached by individuals that are trying to grow their businesses and hey, can you invest in our company? We want smart money. They call it, we want some brains along with the money, so on and so forth. So I've done some just direct investments in startups in the past. And a few years ago, I was actually in Armenia, and I went to a campus of FAST, and it's like sciences and technologies in Armenia. They're investing in that. And they had a angel arm, right? And so basically it was, I was introduced to that group. I went to a few of the pitch sessions. I saw some really good potentials there. So I started investing with Stan Angels. And then that just kind of grew, right? Because then other folks that approached me directly, I would invest in them directly. I would invest in them through the Stan Angels. I would invest in them through other networks. So it started like that, as always, kind of random and then a little bit more systematic. But right now, most of my investments happen through Stan Angels. And most of these are actually US-based organizations, but they have some footprint in Armenia. And they are AI, deep tech type of startups.
Have you made any mistakes that you not think about, but just are aware of over the course of your angel investing career? Just because I know these are going to be somewhat made up numbers. I've heard it's like out of the 10 you invest in, 9 will be flops, but that 1 will make up for the 9 that were flops kind of deal.
That's exactly right. That's kind of what you focus on, right? But what that creates is a lot of like, all right, let's just do it effect. Right. I mean, my biggest, I guess, mistake, if you want to say that, is I am very optimistic. If you heard Hike mentioned, I'm very optimistic. I believe in people, and I don't have a lot of time to do a ton of vetting, And so for me, small investments in people I believe in is a lot of times a no-brainer, and maybe it shouldn't be a no-brainer, but I don't really have a ton of time to dedicate to real vetting. I mean, how many meetings can I have?
Great point. Yeah.
I can make, a 10x kind of, ROI for my current organization. So I have to balance that out too, right? I can sit there and vet out an organization for a small investment until I'm blue in the face, and it still might not matter. So I follow my gut a lot. If I like the founders, if I feel like they're optimistic and they have the kind of the staying power, mental, physical, emotional, financial staying power to make it, a lot of times I'll do a small investment in them. Sometimes I'm a little too giving with my time, and that you forget how valuable your time is. And so sometimes that's a mistake in itself, where I might take an advisory role in a startup that I believe in, but they're not executing necessarily on all the things that you've given them ideas on, and it starts being less and less worth your time. So a lot of times I'll even do it just to help someone out, and I realize that again, I'm robbing myself of time. So I'm learning to balance out my good kind of nature of wanting to help people and wanting to be there for people and not expecting a ton, with being a little bit more, I don't know, being a little more careful with my time and with my resources and all that.
I think those are totally fair things, and I could see how you could fall into that. Your mantra is go giving. I could totally see how you get into that.
Exactly.
Let's go on the flip side then. What are some commonalities you've noticed amongst the startups that have given you the best returns? Maybe in characteristics or product, whatever it may be.
Look, the product has to be good. That's
Right.
that's extremely important. But there's a lot of good products out there that see no they see no traction, and the reason why there's no traction is because there's no execution. I think we talked about this. I think the hidden skills that nobody talks about is sales. I mean, your product could be brilliant, and if you can't sell it, nobody will ever know what the hell it is. So those are some of the things we don't think about. We say, well, this is a great product. According to who, right? According to who? The customer will decide if it's a great product, and the masses will decide if it's a great product. So I like people that are focused. So typically the startups that have worked out at least a small scale is they stay focused. They don't constantly pivot. Pivoting is okay, by the way, but you have to stay focused. You have to go really hard and then pivot if you feel like you found a better direction. But people that are focused, they have a goal and they're obsessed with it. Those startups have typically seen traction. So it could be something as simple as, I have a startup right now that I think is going to be terrific. Their whole focus from a VC that invested in them and with me investing in them was, you have to get to 10,000 users. Paid or unpaid, it doesn't matter. If you get there, we're going to do your next seed, or your real seed, not the pre-seed. And that's what they're obsessed with. That's all they talk about. That's the only metric they talk about. It's the only KPI. That's every meeting is about that. So I like that, right? Because it means they know where they're headed. They have the map. They know the direction. And when they get there, then the results will speak for themselves, and they will show the kind of traction that everybody wanted to see. And then that company will invest in them again. And what'll end up happening is it'll just 10x the momentum, and people will see that they've done what they said they can do, and they will invest. And then now they'll trust in the process of, hey, we were told to go do this, and we got there, and we got the seed we wanted. We're going to continue to listen to people that are smart and that are guiding us in the right direction. So for me, it's the focused companies that I really, really like. Even if they fail, you already know that they have the ability to focus
and bounce back. If they are that focused.
Correct.
In terms of balance, I feel like this always comes up too. We mentioned this a little bit, but you use the word obsess, and I think that's also super important, because there's a difference in someone who is obsessed and someone who just wants something. Because I feel like someone who is obsessed is willing to do what it takes to ensure an outcome, while if you want something, it's almost like it's a nice to have. So that characteristic you bring up resonates with me, because it's saying, if you want to ensure this thing to happen, you have to be like all encompassing. You have to let it really consume you in order to find that success. So
Agreed.
That's a big insight.
Nickolas, one of my interview questions, I'm giving it all away now. People are now quoting me during interviews, by the way. One of the things we ask is, do you love to win or hate to lose? This is a similar concept to what you just asked, right? I mean, who doesn't love to win, right? No one's going to say, I don't love to win. Everybody loves to win. But the people that really get it in life, at least from a business perspective, or from a kind of entrepreneurial or career-wise, is they hate to lose.
Yeah.
That not fear of losing, but the hate of losing drives them not to lose again. Versus, I like to win. I like it. It's fun. It's good.
Yeah.
I enjoy it. Yeah, sure. Why not? I mean, if you've ever seen, you know, now my kid's in sports, and some of the parents will get really upset when their kid is sad or cries after a loss. I'm like, I love it. I love it. They're like, what do you mean? I mean, he's being a spoiled, he's a spoiled, what do you call it? A sore loser. I'm like, no, he's not. He hasn't kicked anyone. He hasn't pushed anyone. He hasn't, he's not being an asshole. He's
Yeah.
angry at himself for losing, and he knows that he could have done better. I love it, man. And they look at me like I'm crazy. Like, I love it. I love when my kid gets pissed when he loses. Now, what you do about it is up to you, right? You still have to be a professional. You still have to be a good sport, and all that stuff. But who doesn't love to win? So it's the
Yeah.
same thing here, right? Like, oh, it'd be nice if we got 10,000 paid users or whatever. Okay, that's it.
Yeah.
That's
Yeah.
like, it'd be nice versus that's it. That's all we talk about. Every KPI, every OKR, every conversation, every meeting is about that one thing. That's all people cared about when they invested in you, is getting those 10,000 users. Then that's all you should be talking about for that time frame. Now, of course, there's other conversations, right? Culture, people, and all that stuff. But from a business perspective, that's all you should be obsessed about. So that's what obsession is to me. Is the obsession to win, to not lose. I mean, you watch Kobe Bryant and his mindset. That guy was absolutely obsessed with winning a title without Shaq. So there was no doubt he would have gotten to that point. And every conversation he probably had with the GMs and the coaches was about getting the right talent so he can win his title, and that's all he cared about. He didn't care about anything else. He didn't care about awards. He didn't care about all-star games. He didn't care about all those little vanity metrics or vanity awards or vanity whatever. He was obsessed with winning his I think it was his fourth and fifth titles, and he did it.
And he did it. They say winning doesn't feel as good as losing feels bad, and I think
Brilliant.
that's
Really
that's
good.
the driving.
I'm gonna remember that, Nickolas.
Yeah, there's so many good translations there. I'm thinking of people in my life that will push me if it's like if you get in the right room with the right people, I feel like And I'll give an example before we move on to the last question. But I run with someone and I know he's super competitive, and that's the reason we run together, is because every time we hit the track, it doesn't matter. There's nothing on the line. We won't say anything about time, winning, whatever. We know if we see the other person next to us, like, we're gonna like go as hard as we can because neither of us want to lose. And it's like, and I think to your point is like, it's not a disrespectful thing too. It's almost a respectful thing. Something that you said the other day that I thought was really good is like reckless empathy. I believe that was the right term. So in terms of like providing competition to your competitors, you're not gonna be like, yeah, okay, yeah, whoever wins. It's like, I'm gonna give you my all so that everyone can really work toward it.
Well, you compete, and a lot of times you compete with yourself. It's not even, you don't, look, there's no one even with your running buddy. I bet you there is no standings. There's no actual seven,
Right.
I've won 7 times and you lost. It's not about that. It's just if there's such respect amongst two competitors that you already know how many times you've won and how many, and it doesn't matter beyond that, right? That you constantly give it your all because you want to win for yourself, no one else.
And to push one another. It's all of it's good stuff. But
Absolutely.
to bring it back, do you have any sectors that you're excited about, investment opportunities that you're looking at? Could be industries or things that you see on the rise.
I mean, tech remains the right place to invest in, I think. If you pay attention to what's happening in the market, the good news is the market's been up. I mean, every day it seems like it's been up a very small portion, right? But where is it? It's in those top 7 tech companies, right? The ones that are pushing AI, and people believe in their ability to actually execute against the AI and do something about it, right? Microsoft, Google, Meta, it's the FANGs basically. So I think tech went into a recession before the rest of the world was in a recession. I believe tech's been in a recession since May of 2022. So we're going on a year and a half, I believe. So tech is usually the first thing in a recession and the first one out. So it's always a good idea long-term to invest in tech. right? So that's one thing I would say. And yeah, sure, AI. You have to be kind of critical and a little cynical, a little skeptical, but you should invest in AI and tech. That's one. Real estate's a tough one right now because the interest rates are bananas, but I don't necessarily see those interest rates going down. So probably still a good idea to invest in real estate. And I would say not commercial real estate. I think that one's still it's got a ways to go down. But I think in a year or two, commercial real estate could be a good idea to invest in. Right now, I think individual homes are a good idea, especially if you can buy cash. And by the way, prices of homes are gone up year over year now, like 1.5% or something crazy like that. It was supposed to go down and down and down and down, right? Because that's what happens.
Yeah.
Interest rates go up, people stop buying, but there's no inventory. People don't want to sell. They don't want to sell their homes because what choice do they have? The homes they're in, they can't afford, right? So if the home that you're paying $4,000 a month in, you would have to pay $18,000 a month in now because of property taxes, how much the value of your home has grown, and the mortgage rates. So it's 4 times more expensive or more than you probably purchased 10 years ago. So people are holding onto their homes. So that creates, again, a demand and supply issue. So real estate could be long-term, could still be a good investment. Investing in yourself, it's always a damn good time to invest in yourself, right? And invest in, when I say yourself, yes, your knowledge base, but investing in yourself and your own company, right? We're constantly, I mean, we didn't bring up Hireclout because we've been talking about kind of investments outside of my company, but this is the number one thing I believe in, right? It's the number one thing I invest in is my company. And that means cash infusion. That means not taking income from the company sometimes because that's a form of investment, right? So if I don't take income from my company because I want to leave that money in there for a few hires or an injection of AI or an acquisition or whatever it is, then I'm investing in my company. I believe that 50,000 that I leave in there or 100,000 is going to 10x eventually. So it's worth me leaving it in there. It's worth me risking it, right? Because it could all go away. But who do I control more than anything? Myself and my company. Yeah. So I think we forget about that. Entrepreneurs focus on too many different things, and they forget that one thing they should be investing in. Just like when as an individual who doesn't focus on your family, that falls apart, and that's your number one thing you should be focused on is your family, right? And in this case, in your business and your work family, basically.
Those are all great thoughts, Avetis. Is there anything else that you want to bring us home with? Final thoughts? Because I think those are exceptional, at least to keep at the top of mind as we move forward and how we invest.
Slow and steady wins the race. You don't always have to step on it. You don't have to make moves based on the level of that others are making moves on, right? You have to be smart. You can't swing too far above your weight. You know what I mean? You could still take the advice that those people are giving you and just do it at a small scale. Because to them, if you're surrounded by multi-millionaires and they're investing $250,000 on a thing, if they lose that, it may not be a big deal for them, but it might break you, right? So just because they did it, you shouldn't necessarily do it. You might want to do it at a much smaller scale, whether it's 50,000 or 25. And sometimes you can't get into those investments because there's minimums, right? There's minimum check sizes. There's certain things you just can't get into, and that's okay. You bow out of those things that you cannot. I don't want to say afford, but you just aren't ready for. And then learn from it. Learn from the results. Learn from the failures of those people. Learn from, still ask questions and see how they did it. And when you're ready, that's when you do it.
Those are all great thoughts. And I think we'll leave the books that were mentioned in the show notes and the app Libby in the show notes as well, so people can hop on and begin to train themselves as they move forward.
Love it. All great questions as always, Nickolas. Thank you for being here.
Thanks for having me. This was a blast.
Thanks, brother. And that brings us to the end of another great episode of the Tech Leaders Playbook. I want to thank you for joining us and I hope you took away some valuable insights to apply in your professional journey. Don't forget to subscribe on your preferred podcast platform so you don't miss out on the next great conversation. I promise it'll be good. If you enjoyed today's episode, we'd appreciate if you could leave us a review. Your feedback not only helps us improve, but also help others discover the podcast. Better leaders mean better working environments. Better working environments leads to happier people. Remember, a rising tide lifts all boats. I'm Avetis Antaplyan, and this has been the Tech Leaders Playbook. Keep leading, keep learning, keep giving, and I'll see you on the next one. Until then, stay inspired, my friends.